Hello. Good evening to all dear friends. First of all, I am thankful to the president. I am audible to all?
Yes.
Hello, am I audible?
Yes, sir.
Audible.
Yes. Okay. First of all, I'm thankful to our president, Mr. Jain, for appointing me as a chairman of this committee. And I am very grateful to all the members of this committee, and also the advisors, including Mrs. Premlata Bansal, who is there, who has joined just now. All are senior persons on this committee and as a member, as an advisor and all that. So I hope that in this year we should be able to give good results. So now it has been decided in the last meeting of the committee that we will be having webinar on every fourth Thursday of the month. So this is the first webinar series. Provisions of new tax regime, which old tax returns and rates should be reduced. So this is that direction.
అది వాళ్ళకు
अब कैसे किया था तूने बेटा?
Hello.
Yes. ये कौन है?
Hello.
Yes, hello. Vadwa.
Vadwa sir, welcome.
कुछ भी
Sir, Vadwa sir, welcome. Sorry, I was there. There was disconnection in that. So today, this is the first webinar. So our speaker today is Mr. Manish Dafaria from Indore, and chairman of the session is the advocate Mr.
Sir, your voice is not clear.
Bhaskar.
It is better to mute all the other members except the speaker.
No, that's not the issue. Is bandwidth is low. VP गुप्ता साहब को थोड़ा सा अपना इंटरनेट कनेक्शन देखना है.
गुप्ता सर, आपका ये वीडियो ऑफ कर दीजिए तो वॉइस आएगा. गुप्ता सर लेफ्ट हो गए लगता है.
ये सब डिफिकल्ट.
मुझे तो ठीक है ना बेटा, मुझे तो आवाज नहीं आ रही ना.
Okay. Yes. To say a few words, and then Mr. Patel may take over as chairman of the session, and then we can proceed on this. Thank you very much.
Thank
Jain
you,
Saab.
VP Gupta ji, thank you very much. And I am really glad that we are having Bahan Premlata Bansal ji, Vadwa Saab, and our many Anil Mathur ji, R.D. Kakra ji, and many other colleagues who in themselves are not only very knowledgeable, but in a sense they are an institution in themselves. So I am sure that this effort which is being taken by Shri VP Gupta ji, our chairman of the Directors Committee, it will be very fruitful. And in the year, during this year, in time to come, at least let us target to have one program every month on direct taxes. So this is the first program. Let there be 9 programs. And during the budget, in the month of July, we can have more than one webinars. Because this time full budget will be only in the month of July. And this subject has been very carefully selected by VP Gupta ji. Though generally people may feel that this old regime, new regime, we know, but then lot of changes are taking place. It was introduced in 2021, and in these 3 years, it has evolved a lot. A lot of amendments have also been made. People are still trying to understand whether I will be benefited by remaining in the old regime or opting for the new regime. Now it is not opting for the new regime. That is automatic. It is by default. So we have to opt for the old regime in case we want. I was calculating the tax burden. I made a note, but I am not discussing that with you because that is the prerogative of the chairman and our learned speaker. I am not entering into their field. I can only tell you that I have got some offers from other speakers. They can speak well. He has also sent me a note. Our former principal commissioner of income tax, Mr. Pawan Ved, he is now for about more than 1 year. He is also our life member. So he can speak on the remedies against arbitrary use of powers. And there are decisions of Supreme Court, decision of Patna High Court. With reference to those, he can discuss, and it may be very beneficial to all of us. So, subject to the allotment of the date by Sri V.P. Gupta ji, we will request him and he will speak. Friends, I wish you a very meaningful and result-oriented program today so that we will be able to advise our clients properly whether they should remain in the old regime or should go for the new regime, what is beneficial, how to calculate the tax in both the cases. I was just calculating the tax on 15 lakhs. Tax on 15 lakhs in the new regime is 1.5 lakh rupees. And in the old regime, it was 2,62,500. But then if you go for new regime, then in that case, many deductions and exemptions are not available. So our learned speaker will educate us as to how we should proceed, which when some benefits have been allowed from assessment year 2024-25, that also he will discuss. So once again, I welcome you all and thank you very much. Let us keep on organizing such programs. And this program, apart from Zoom, this is also available on YouTube. So that link also circulated. So thank you very much. And once again, welcome. I think Bhaskar Bhai is
Mr.
ready.
Bhaskar will take over.
Hello.
Yeah.
Good evening, all of you, those who have joined this seminar by way of webinar. Our National President, Sri Narayan Jain Sahab, our Deputy President, Sri Samir Bhai Jani, our Secretary General, Sri R.D. Kakra Sahab, Chairman of Direct Tax Committee this year 2024, Sri V.P. Gupta Sahab, our today's speaker, Mr. Manish Dafaria, who is going to speak on old taxation regime versus new taxation regime and analysis of section 115 BAC. All the other dignitaries from our All India Federation of Tax Practitioners, that is all the national past presidents, the other dignitaries of AIFTP and the fellow members. First of all, I would like to thank Sri Narayan Jain Sahab as well as R.D. Kakra ji and V.P. Gupta ji for giving me this opportunity of being a chairman of this session under the provisions of Income Tax Act. This type of seminar or the webinars in future also will take care by the national president, as he said just now. But I would like to say regarding that aspect also that this is the first time in the history of AIFTP we are going to deliver webinar lectures on webinar so that each and every person without attending the physical meeting in everywhere, they can have this type of knowledge from the eminent personality, being a speaker or the chairman or the faculties or other person. new regime, it was introduced by the Finance Act 2020, and then after with effect from financial year 21-22. Then after it was introduced from the assessment year 24-25, and accordingly it was considered by the finance department that the section itself, now section 115B AA, section 115 BAB, section 115 BAC, and section 115 BAD, it is now available to the different SSCs also. First of all, in the year 21-22, it was only for individual and HUF. And then after, it is expanded these sections, and now it is available to all these SSCs without partnership firm, LLP. The same are left out in this regime. But moreover, we can say about the new regime and old regime, the deduction which are going to be allowed, it is restricted to some extent for new regime. But from next year, it will compulsorily, it will be taken care by the CBDT, and it is introduced that the new regime itself will be considered at the time of filing return of income. If you want to go with the old regime, then you will have to opt the old regime. Otherwise, it is not possible for each and every SSCs, those who are covered by this Finance Act. And moreover, they have to file their return of income within the stipulated time as provided under section 139(1) of the Act. This is the prima facie things which I have introduced before your August gathering. Otherwise, the time will take more and more, and the speaker will have less time. So I would like to go with the details being provided and going to be provided by our eminent speaker, Mr. Manish Dafaria, Indore. Thanks all. Now I hand over this mic to our eminent speaker, Manish Dafaria, to deal with this topic of old regime and new regime. Thank you.
Thank you very much, sir. Before I start deliberation on my topic, I must express my heartfelt gratitude to all the organizers for a person like me being amongst this August gathering. Stalwarts of taxation in the country is really a matter of pride, and more specifically with respect to National President AIFTP, Narayan Jain sir. So I must mention this thing to you. When I started my practice, and then I have purchased your book, Income Tax Pleading and Practice, in order to learn all about income tax draftings and submissions, I never thought that one day I'll be delivering a lecture before yourself, sir. So when you say speaker would be educating to you, sir, we can never think about, say, educating to a person like you. It is you who have kept on educating all of us during whole of our lifetime. So getting this opportunity, thank you very much, sir, for all the saved knowledge you have imparted to us. All other dignitaries of the AIFTP, the marvelous work is being done by the Federation, which helps all the professionals across the country. So it would be my endeavor in today's webinar, and I have been told this is the first webinar being organized by AIFTP. So I'm happy to be the opening batsman for AIFTP. I'm sure that what is being started today, this will go a long mile in the history of AIFTP. So thank you for giving me this opportunity, sir. I'll take just 1 minute to share my screen, and then we can start our discussion, sir. So as have been already mentioned by President sir and our worthy chairman for the session, the topic of our discussion is old taxation regime versus new taxation regime, basically analysis of this whole new section 115 BAC. Since long last 5-10 years, we all can accept one particular thing, that this whole income tax has undergone a good amount of changes. The talk about new direct tax code is already in air again. But even if they bring this direct tax code later on or not, the basic structure of income tax itself has undergone a good amount of change in last 5, 7, 10 years. When we all have started studying income tax in our initial days, the kind of law was there, the kind of system was there, and now it is completely changed. The calculation mechanism, the assessment mechanism, this reassessment new scheme, and all those things. So from that particular perspective, considering the change is the only unchanged rule of nature, now we have got this whole new taxation regime. As of now, we are having this old versus new, and then we need to have a detailed discussion about these aspects. But I won't be surprised if very soon, probably next 3, 4, 5 years, they may only have this new taxation system dispensing with this old concept altogether. But as of now, since we are having both of these concepts in our tax law, old versus new, so let's try to have a deep dive into both of these mechanisms, particularly what this whole new taxation regime is all about. Okay. So the whole idea is this new taxation regime is as of now applicable for variety of assessees. Today, of course, we shall be focusing only on individual and HUFs, but it is there for various other assessees also. We already have the section 115BAA, which is applicable for domestic companies, prescribing a lower rate of taxation of 22% plus surcharge plus cess. Then we have this 115BAB for new manufacturing domestic companies, 15% rate of tax. Then we have, of course, this 115BAC, which is going to be our topic of discussion, which is now applicable not only for individual and HUFs, but it is applicable from AY 24-25 onwards, applicable for AOPs, BOIs, artificial juridical persons also. Then we also have this 115BAD, which is talking about resident cooperative societies, new tax regime applicable for all these assessees. So actually speaking, what has been left out from this whole new tax regime concept are only partnerships and LLPs, where still the tax calculation and everything happens as per that old system of taxation with which we all are quite familiar. All other assessees, particularly all other assessees except this partnerships LLPs have already been given this option of what is being called new tax regime. One really wonder why partnerships and LLPs have still been not covered into this particular concept. But this is what it is as of now. This is what is the status of our tax law. So all these assessees have been given this particular option. The mechanism of this new tax regime has been created for all these assessees. So what exactly is this new tax regime? What is the difference? The classical mechanism of taxation, the classical system of taxation, what we call old tax regime, vis-a-vis this new tax regime. So basically, there are 2 or 3 very prominent differences. First is, for all these cases of new tax regime, for all the assessees, rates are given in the section itself, in the Income Tax Act itself. Okay. With respect to all our classical old system of taxation, we used to get a rate of taxation from Finance Act every year. Now the rates for this new taxation system are being given in the Income Tax Act itself, in that particular section itself. Of course, cess and surcharge comes from the Finance Act, but the rates of taxation, so far as new tax regime, it comes from the Income Tax Act, from the section itself. Basically, Chapter 10 of Income Tax, Chapter 12 of Income Tax, which gives me all these rates of taxation. Then for all the cases, all the assessees of new tax regime, exemptions, deductions, incentives whole lot of these exemption, deductions, incentives are not available. And that is what is the basic crux of the system. What the government is saying, we want to create simplicity in the tax law. We feel that all these exemption, deduction mechanism create a good amount of complexity. So we just want to cut out these complexities in the tax law. So we will not be giving you various exemptions, deductions, incentives. And in lieu of this, we will be charging you at a lower rate of taxation. So all these new tax regime for all the assessees are basically a lower rate, no deduction regime kind of thing. Not much of the deduction would be available, but a lower rate of taxation would be there. That is what is the hallmark of this new tax regime. For all the assessees, companies, partnership, cooperative societies, manufacturing companies, individuals, HUFs, for all these, the new tax regime basically means a lower rate of tax coupled with without deduction, without exemption. Okay. With this brief background, let's come to our area of focus. What is this new tax regime for individual and HUFs, section 115 BAC? Now, sir, very interestingly, when we talk about this new tax regime for individual and HUF, probably we need to coin a new terminology. There is a old new tax regime and there is a new tax regime. The old new tax regime, which was applicable till AY 23-24, and new tax regime, which would be applicable from AY 24-25 onwards. So before we come to this new tax regime, which is going to be applicable from AY 24-25, it would be good if we just have a brief idea about the original 115 BAC, as was applicable till AY 23-24. What I am calling is a old new tax regime. Then we are of course having now a new tax regime. So this tax regime, which was applicable till this assessment year, that is AY 23-24, the whole idea has been introduced by Finance Act 2020, first time applicability, assessment year 21-22. Till now, till AY 23-24, this new tax regime was applicable only for individual and HUFs. And very importantly, till this year, AY 23-24, this new regime was an opt-in mechanism. By default, the old earlier classical system was applicable, and if assessee feels so, he was required to exercise an option in order to come into the purview of this new tax regime. This is the position till AY 23-24. And then there was this rebate under section 87A, which was common till AY 23-24. It was common for old system as well as new system, available up to income of ₹5 lakhs with maximum rebate being 12,500. This is the story. This is the position with respect to new tax regime as was applicable till the assessment year, which has just gone by, AY 23-24. So that's why I'm calling this as a old new tax regime. Now, what is going to be there from the current year, that is AY 24-25, the new avatar of new tax regime, a new tax regime, significant changes in this whole concept. Okay, what I feel from say AY 21-22, government has started pushing this new tax regime, but then their data has told them that not many people are buying this whole concept of new tax regime for AY 21-22, 22-23, 23-24. Not many people have opted for this new tax regime. I also feel government is probably the best marketeer in the country. If it has to market something, it will market it at any cost by using all the power under its command. So then government has said, no, we want this new tax regime to be, say, widely applicable. It needs, we need to sell it like anything. So from AY 24-25, they have made some very significant changes, some very fundamental changes into this whole concept of new tax regime. And this has given a new avatar of this new tax regime it has created before us. Section is still same. Earlier, it was section 115 BAC subsection 1. Now, this new avatar of new tax regime is 115 BAC 1A. So what we all would be dealing with from this assessment year 24-25 would be section 115 BAC 1A, which is now our new avatar of this new tax regime. Three very significant changes which have been introduced in this whole concept of new tax regime from AY 24-25. First is, as I have mentioned, till last year, this 115 BAC was applicable only for individual and HUF. This year, they have casted their net wider, and now they are covering not only individual and HUF, but they are covering AOPs, BOIs, and artificial juridical person also into the system of new tax regime under section 115 BAC subsection 1A. Okay. Applicability of this whole new tax regime to AOPs and BOI is going to create some very interesting situations that we will be discussing in the later part of our discussion. But this is what is the first major change so far as this new tax regime is concerned. Then second, and probably the say most significant change, as my chairman has already, new tax regime is now applicable by default. By default, you, me, we all are in this new tax regime. If we want to go back to that older system, we need to opt out. Till last year, this was an opt-in mechanism. Now, from this year onwards, this is an opt-out mechanism. By default, we all are into new tax regime. If I feel that earlier system is good enough for me, then I need to exercise an option. And there are some very important issues related with that option that also we will be discussing later on. But if I want to go back to the earlier system, then I need to exercise an option specifically. And then I will be allowed to enjoy the benefits of that older taxation system, older tax regime. Third very significant change which has been made in this whole concept of new tax regime from AY 24-25 onwards, that is now there is a separate 87A rebate mechanism. Okay. So as they have introduced the subsection 1A in section 115 BAC, they have introduced a proviso in section 87A rebate mechanism. There is an increased limit of this 87A rebate now for new tax regime assessees, and there is a concept of marginal relief also which has been introduced. When this whole 87A has been introduced earlier, where say up to 5 lakhs of income, there was a rebate available up to 12,500. There was a very significant grouse against this section that there is no marginal relief applicable. So if my income is 5 lakhs of rupees, by virtue of rebate, no tax liability. The moment my income crosses 5 lakhs, it is 5 lakhs 1 rupee, then my tax liability is 12,500. That is with respect to old tax regime. For new tax regime, they have say resolved this anomaly and have created that whole concept of marginal relief with respect to 87A rebate. Again, we will have a detailed discussion about this subsequently. Okay. So these are three very significant changes with respect to new tax regime. Increased coverage, individual HUF, AOP, BOI, AJP. By default applicable, you need to opt out for the old system, and then there is a separate 87A rebate mechanism. Then two smaller changes they have also introduced with respect to this new tax regime from AY 24-25 till 23-24. Somebody in the case of this new tax regime, no deductions were applicable at all. From this year onwards, they have become little bit generous, and they are saying, okay, we will allow at least standard deduction to the salaried assessees. Okay, they have to hard sell, they have to market this whole new tax regime concept. So they are building incentives. Okay, so that's why they have said that, okay, we will give you this benefit of standard deduction, even if you apply for this, if you remain with this new tax regime, we will give you a standard deduction. And then along with that standard deduction for salaried assessee, there is a younger brother to that salary standard deduction under section 57 clause 2, with respect to that family pension. They allow me a small deduction of say 1/3 of family pension up to maximum 15,000 rupees. Till last year, for new tax regime, even that family pension deduction was not available. From this year, since they have allowed standard deduction under section 16, they have allowed that family pension deduction also under section 57 clause 2. And then at the top end of the say tax calculation, they have again introduced a significant change, that maximum surcharge limit. For old system, beyond 5 crores of income, the rate of surcharge is 37%. An old tax regime, for income beyond 5 crores, the surcharge is 37%. Now they have said that for new tax regime, they have removed that top slab of 5 crores. Beyond 2 crores, the surcharge is 25%, and this will remain so even if the income crosses 5 crores with respect to new tax regime assessees. So maximum surcharge for new tax regime has now been restricted to 25%. Okay. So in a sense, these are 4 or 5 very significant changes in the structure of new tax regime, the new avatar of new tax regime, section 115 BAC subsection 1A, along with section 87A proviso, and some other changes in other places. So this is what is this new setup, new avatar of this new tax regime from AY 24-25 onwards. So let's try to develop some further detailed understanding about each of these aspects of new tax regime. Okay. First of all, again, some say basic concepts with respect to new tax regime earlier also, and this year also, that when this new tax regime applies, the rate of taxes are same for across all the age groups of the individual. They don't distinguish between senior citizens, super senior citizens. It is same for all the assessees across the board, across the age group. Then this whole new tax regime is applicable for all the assessees. It is applicable for residents as well as even for non-residents also. So for the section 115 BAC is concerned, the old 115 BAC, that is 115 BAC 1, and new 115 BAC subsection 1A, it is applicable, available even for non-residents also. Now, very interestingly, all these new tax regime sections, they override all other provisions of the Act. All these section 115, BAA, BAB, BAC, BAD, they all start with this non-obstante clause, notwithstanding anything contained in this Act. So the section override all other provisions of the Act, but it is subject to the provisions of chapter 12 itself. In the chapter in which these sections are contained, so it is subject to provisions of all those sections, section 110, all these sections of say chapter 12, section 110 to section 115 BBI, meaning thereby whatever are the rates prescribed in these new tax regime sections, they will be applicable, but all the income which are taxable at special rate, they will continue to remain taxable as though at those special rates only. All my capital gains, all my lottery income taxable at 30%, all these virtual digital asset, VDA, crypto income, everything again taxable at 30%. So those special rates would remain applicable. The section is overriding all other provisions of the Act, but it is subject to provisions of those special rates of taxes, chapter 12 provisions would always override this 115 BAC provisions. Okay. Now coming specifically to this section 115 BAC, going a little bit deeper into this. So what is happening? That they have prescribed a lower rate of taxation. I'm sure we all are familiar with those rates of taxation. So that's why I'm not covering those rates of taxation here. But otherwise, it is simple. When 115 BAC new regime is applicable from this year onwards, first 3 lakhs, the rate of tax would be 0%. Next 3 lakhs, it will be 5%. 6 to 9 lakhs, it will be 10%. 9 to 12, 9 to 12 lakhs, this would be 15. 12 lakhs to 15 lakhs, it is 20%. And beyond 15 lakhs, the rate of tax would be 30%. Okay, this is what is the basic rate of tax with respect to this new tax regime. I'm sure we all are familiar with those rates of taxation. Now we all can see the significant reduction in the rate of tax. In old system, the 30% highest rate kicks in beyond 10 lakhs of income. For new tax regime, this highest 30% rate comes into picture beyond 15 lakhs of income. Okay, so there is a significant reduction of tax rates. In the old system, for immediately after 5 lakhs, the rate of tax is 20%. First 2.5 lakhs, no tax liability, 2.5 to 5, it is 5%. And then straight away from 5 to 10 lakhs, we are at 20%. In new tax regime, these tax rates are increasing gradually, okay, slowly. Okay, so whenever there is a migration of an assessee into a higher slab, the pinch would be little bit lower. First 3 lakhs 0%, then every 3 lakhs the rates are increasing by 5%. So significant reduction in the rate of tax. Now, when they have reduced the rate of tax, what they have taken away from the assessee? They have taken away various kind of deductions. Almost all the deductions which can be claimed by an assessee under different heads of income, almost all those deductions have been taken away in case of this new tax regime. Okay. So with respect to salary income, what they say, we will not give you any deduction with respect to this LTA, LTC, leave travel allowance, leave travel concession. That deduction we will not give you. A very significant deduction claimed by good number of, say, salary taxpayers and provide a significant tax benefit, that is HRA. That is also not available with respect to new tax regime. And then that small deduction of professional tax, that is also not allowed. Somebody who is into this new tax regime, these salary deductions would not be allowed. As I already mentioned, till last year, AY 23-24, even standard deduction was also not allowed. Now, from AY 24-25 onwards, they will allow standard deduction, at least in the case of salary income. Now, coming to income from house property, those who are in this new tax regime, they will not allow me that interest deduction with respect to self-occupied property. That 2 lakhs deduction I cannot claim if there is a self-occupied property. If it is a rented property, I'm having a rental income, then of course I can claim municipal taxes, I can claim deduction on account of housing loan interest, everything. But even that rented house property results into a loss, I cannot set off this loss against any of my income if I am into this new tax regime. Old tax regime allows me to claim a set off of house property loss up to 2 lakhs of rupees. New tax regime will not allow me to claim any set off of loss with respect to any house property income. If it is self-occupied property, I cannot claim interest at all. If it is rented property, I can claim interest, I can claim property tax, but only up to the income which I'm offering. Any excess deduction I cannot claim because they will not allow me set off of any house property loss. With respect to business income, again, they have created certain restrictions. All these SEZ exemptions under section 10AA, that will not be allowed. Any additional depreciation I cannot claim. Normal depreciation would be allowed, but additional depreciation I cannot claim. Under section 35, if I can give donation to various scientific research associations, national laboratories, universities, etc. So all those donations would get restricted, would not be allowed in case of new tax regime. Then with respect to these specified businesses, warehouses, and an infrastructure facilities and everything, where under section 35 AD, assessee can claim deduction of even capital expenditure also. So again, this mechanism would not be applicable with respect to this section 30, with respect to this new tax regime. Some further restrictions with respect to these MPs and MLAs, their daily allowance and constituency allowance, which is actually eligible for exemption under section 10 clause 17. So for new tax regime, even that benefit would not be available. A small deduction which is available with respect to clubbing of minor child income up to rupees 1500, even that would also not be available in case of this new tax regime. And probably the biggest impact of this whole new tax regime on the deduction side would be with respect to this whole chapter 6A deduction. Okay. All these chapter 6A deductions starting from section 80 till 80U, nothing would be allowed. No deduction under chapter 6A except 3. The first, what they will be allowing me, 80CC-D2 and then 80CC-H2. That is employer's contribution to National Pension Scheme and employer's contribution to Agniveer Fund. It is hardly a deduction actually. These are employer's contribution, and we all know as per the mechanism of taxation, these employer's contribution to NPS and Agniveer Fund, first they add it to my salary income under section 17. Since this is the amount which has never been received by me as an employee, and still they are adding it to my salary income. So that's why now they have to allow a deduction in order to nullify the impact of these employers' contribution. So this is what is the deduction which they will be allowing to me, 80CC-D2, 80CC-H2 with respect to employers' contribution. And one section which I fail to understand is something very dear to the heart of say government, that is the section 80JJA with respect to this say new employment, 30% of wages paid to new workmen. That deduction is still available in this new tax regime, whereas all other deductions under chapter 6A, they have very clearly, strictly disallowed. This one section 80JJA that is still continued even in this new tax regime. Okay, so probably from a say salaried assessee, that the biggest impact with respect to this new tax regime on deduction front would be with respect to this salary. HRA will not be allowed. House property interest deduction, that will not be allowed, and all these chapter 6A deduction would not be allowed. So basically now this will be a matter of say mathematical calculation, mathematical comparison, going by this lower tax regime, ignoring the deductions or claiming the deductions, and going for the say old higher tax regime. A good amount of comparison would be required to be done, and accordingly it has to be decided whether to continue with the new one or to opt out and then go for the old one. There cannot be any standard template kind of thing in order to decide in which situation which would be better, but just some quick calculations we can see, some idea we can generate. That how does this whole new versus old will be say applicable from this year onwards. What may be some basic idea we all can generate. So something like this, say for example, this table should give us some idea. Somebody is having income of 25 lakhs before claiming any deductions. So under new tax regime, he or she would be paying a tax of 4,50,000. Now the same amount of tax in the old tax regime, I'll be paying at the income of 21 lakhs 25,000. So what I have tried to do, I have tried to create a say comparative, I've tried to calculate a comparative figure of income. What would be the equivalent figure of income in both the regimes? So before deduction, if my income is 25 lakhs, in the new tax regime, my tax liability would be 4,50,000. Corresponding tax liability assessee would be incurring at the income of 21,25,000. So this gives me an idea that if somebody is in a position to claim deduction of more than 3,75,000, where income before deduction is 25 lakhs, and somebody is in a position to claim deduction of more than 3,75,000, then he or she should be advised to go for that old tax regime. Then old tax regime would be beneficial for that assessee. If my deduction amount is equal to or less than 3,75,000, then my overall tax liability in new tax regime would be lower. So this whole table should give us some ideas. Moment my income crosses 15 lakhs, this 3,75,000 becomes a golden figure for me. If my deductions are more than 3,75,000 for all the assessees having income 15 lakhs or more, if the deductions are more than 3,75,000, then it would make sense to go for old tax regime. Okay. For lower categories, we can see if somebody is having income of 9 lakhs, in new tax regime without deduction income 9 lakhs, the tax liability would be 45,000. In old tax regime, I will have an equivalent amount of tax liability at the income of 6,62,500. So if somebody is having income of 9 lakhs, he or she is in a position to claim deduction of more than 2,37,500, then the tax liability in the older tax regime would be lower. Otherwise, new tax regime, it would make sense to remain in the older tax regime. So probably the idea would be that for all the assessees into higher income bracket, the old tax regime would make sense, because normally they will be having deductions out to the tune of this 3,75,000 or more. Say, for example, if I talk about a normal salaried assessee having income of 25 lakhs, then he will be definitely having ATC 1.5 lakhs, even if not made any specific investment, but by virtue of the say children tuition fees itself, that a plus provident fund kind of thing. So 1,50,000 deduction would be on the table. He, in all probability, he will be having that housing loan. So another 2 lakhs deduction on account of housing loan, plus a 25,000 say ATD mediclaim deduction. So this will make up this differential for 3,75,000. Any further deduction if he's in a position to claim, for example, HRA or something, then older tax regime would be beneficial for those assessees who are having income in the higher bracket. For the 9 lakh kind of income assessee, having a deduction of more than 2,37,500 probably may not be a situation. The assessee may not be in a position to have that much of say surplus money so as to invest and claim deduction of more than 2,37,500. In which case only this old tax regime would make sense for the assessee having income up to 9 lakhs. So the whole idea is this whole calculation would of course change depending upon the say age of the assessee also, because in old tax regime I'll be getting a benefit based on age of the assessee also. Super senior citizen more than say 80 years of age, then older tax regime would generate certain additional benefits. So there can never be a say standard template kind of thing based on which we can always come to a say immediate conclusion which regime is going to be beneficial. It is always going to be a matter of calculation, doing a comparative analysis of both the cases, and then coming to a conclusion which is going to be beneficial for the assessee. These are just some basic ideas, some quick number crunching kind of thing in order to help us to generate some basic clarities whether old would be beneficial in a case or the new would be beneficial in a case. Okay. Now coming to another aspect of this whole new tax regime, that is this 87A rebate. As I have mentioned, now there is a separate mechanism of this 87A rebate for new tax regime. They have inserted a proviso in section 87A. For all old tax regime cases, 87A rebate would be available up to income of 5 lakhs of rupees. The maximum rebate would be 12,500. Those assessees who are there in this new tax regime, the rebate would be available if income is up to rupees 7 lakhs. Maximum rebate amount would be 25,000. Okay. And then very interestingly, if income exceeds rupees 7 lakhs, they will be allowing me a marginal relief also. If income exceeds rupees 7 lakhs, maximum tax payable would be the excess of income over rupees 7 lakhs. My tax liability would not go beyond the amount which my income has, by which my income has exceeded rupees 7 lakhs. So that is the concept of marginal relief, which is already there with respect to surcharge. Now that has been introduced under 87A rebate also, but only for the new tax regime cases. For old tax regime cases, they've still not thought fit to introduce this concept of marginal relief. They are still going ahead with that absurd situation where income increases by even rupees 10 beyond 5 lakhs. The tax liability would be around 12,500 in case of old tax regime. That absurdity still continues. New tax regime, of course, they have accepted, they have corrected that anomaly. Now, one very important aspect with respect to that 87A rebate, with respect to my interaction with say, number of professionals and other persons, I feel there is a good amount of confusion on this part. Whereas this new tax regime, 115 BAC, is now applicable to individual, HUF, AOPs, AJP, everybody, resident and non-resident. This 87A rebate is only for individual and that too resident in India. So loosely everybody is saying up to 7 lakhs of income, no taxes payable. That is only in the case of individual resident in India. Even for HUFs also, this 87A rebate is not applicable. As a tax professional, we all are always we all have this thought process in our mind always that whatever is there for individual, it is always there for HUF. The tax laws have been normally designed in this manner only, that we always think HUFs and individual would go hand in hand in every case. This is one particular case where individuals have been given that particular rebate. HUFs have not been given. Okay. All other entities which are now eligible for new tax regime, BOIs, AOPs, etc., but they are not entitled for 87A rebate. So for all these HUFs, AOPs, everybody, even if they are in the new tax regime, if income is more than 3 lakhs of rupees, the tax liability would be there. Even for non-residents also, if income is more than 3 lakhs of rupees, the tax liability would be there, despite of they being in the new tax regime. Only for individual resident in India, this 87A rebate, no tax liability up to 7 lakhs of rupees would be applicable. And since we are discussing just one more smaller point, even if I am an individual resident in India having income up to 5 lakhs of rupees, it may not be always the case that there is no tax liability at all. The general idea is this: up to 7 lakhs of rupees for an individual, no taxes payable. But we all can understand as a tax professional, there may be some cases, because what they are saying is this: in case of 87A rebate, the maximum rebate which is available is 25,000. This 25,000 is based on the calculation that all my income up to that 7 lakhs, all my income is taxable as per normal rate. But if, say, for example, I'm having any income which is taxable at a special rate, within that 7 lakhs, I'm having some income which is taxable at a special rate. For example, this short-term capital gain under section 111A, or for that matter, any lottery income, any crypto income taxable at the rate of 30%, then whole of my tax liability would not become zero, even if I'm entitled for 87A rebate. So it is good to say for media that up to 7 lakhs, no tax liability is there. But as a tax professional, I think we all are in a position to appreciate this thing, that there may be certain cases where income of an assessee is 7 lakhs of rupees. He is an individual resident in India, but still he is required to pay some amount of tax if the income includes some income which are taxable at a special rate. Okay. So this is something about 87A rebate. And then third aspect of this whole jugglery of this new tax regime 115 BAC is exercising the option. By default, I'm into new tax regime. From this year onwards, we all are into this new tax regime. Now, by doing the calculation, I come to a conclusion that the older one is better for me. So then I need to opt out from this new tax regime. I need to exercise an option. There's something very important about this option. We all should be able to appreciate this thing also, that sometimes in this practice of taxation, a small mistake may cost very, very heavily on the assessee. So there is one of this issue involved here also with respect to this exercising the option. If assessee is not having any business or profession income, salaried assessee, house property income, capital gains, other sources, no business income, then they say this option can be exercised on a year-by-year basis. Every year you can decide, old or new, what is beneficial for you. And then if you want to go for old, you want to opt out, you have to exercise this option along with furnishing of a return of every year. This is important. The time of exercising the option is furnishing of ITR. Now let's contrast this with respect to business cases. If assessee is having income from business or profession, then the option is to be exercised on or before the due date of furnishing of ITR. I'm sure all the senior stalwarts sitting in the audience, we all should be in a very clear-cut position to identify this differential in the language, the timing of exercising the option. When assessee is having business income, the option needs to be exercised on or before the due date of furnishing of ITR. I may file my ITR later on, belatedly, beyond the due date. But the option for opting out from new tax regime has to be exercised on or before the due date of furnishing of ITR in case of business profession income. Non-business cases, then you may very well exercise the option at the time of furnishing the ITR. So even if I am filing my return belatedly, I do not have any business income, I will still have that option available with me to go for the old tax regime. But all the business profession cases, even if I'm filing my return belatedly, if I want to go for old tax regime, the option has to be exercised before the due date of furnishing of return. Once the due date of furnishing of return is gone, they will allow me to file my return. Of course, belated return I can always file. But then in case of business income, I will not be allowed to opt out. I would be forcefully into the new tax regime if I'm having business income and I have not exercised the option before the due date of furnishing of ITR. Then they say, as was there in earlier case also, that once this option has been exercised in case of business cases, it will remain applicable by default for all the subsequent years. I may withdraw only once. Once I have opted out from new tax regime, I can come in again. One opportunity would be available. But now if I have come in after going out, I have come in then I will never be allowed to go out. This is some kind of a complicated in and out mechanism they have created with respect to business income. It was there earlier also. It is continued with this new avatar of new tax regime again. And again, a small but sometime may be important, that this withdrawal is not permissible in the year in which it is exercised. So the whole idea is this: for all those assessees who are business or profession cases, before the due date, a proper careful calculation is required to be done, whether to opt for new or to opt for old. If we feel old is beneficial, option is to be exercised before the due date of furnishing of ITR. And then later on, I feel no, old, no, but new is good enough for me. In the very same year, I will not be allowed to withdraw that particular option. I can withdraw that option only in the next year. So very careful calculation, careful consideration would be required, at least with respect to business professional individual cases, but with respect to exercising the option or not to exercise the option. So these are three very basic significant changes with respect to this new avatar of new tax regime. All these deductions not available except those standard deduction and something, 87A rebate, and all about this exercising the option. Okay. Few say ticklish issues which are arising from this whole mechanism. So I'll just open up those particular issues for the say discussion amongst the audience, and then I'll say complete my deliberation. Then probably if time permits, we can take up say questions with respect to this discussion. Now this whole change of say new tax regime.
ऑलमोस्ट त्याच्यासारखं देतोय, फक्त एक मेजर नकोय. एवढे फिगर चेक करून बदलून टाकले.
Fine. So with this whole new tax regime being made as a default tax regime now, everybody is in this unless and until he or she opts out. So two or three some basic questions which are now arising. That what will be the basic exemption limit? Okay, the limit up to which no tax is payable. This is a limit which is required for say number of other sections in the income tax. Say for example, with respect to charitable organization, the provision says that if income of charitable organization before claiming exemption under section 11 is more than this basic exemption limit, then this whole 10B, 10BB audit and everything is necessary for the charitable organization. So they use this term limit up to which no tax is payable, basic exemption limit. Now, after this new tax regime being made a default, whether the basic exemption limit is still 2.5 lakhs or this will be 3 lakhs of rupees. The basic exemption limit is always decided with respect to individual assessees. The limit up to which no tax is payable. So for old tax regime, it is 2.5. For new tax regime, it is 3 lakhs. Now, my personal understanding is this, that for all the sections of income tax, wherever they are talking about limit of income up to which no tax is payable, now this will be treated as 3 lakhs of rupees, because 3 lakhs is now by default applicable exemption. Somebody has to specifically opt out from this, and then he would be into the 2.5 kind of say slab rate. So 3 lakhs is my understanding would be the say basic exemption limit for all other sections. Now, another interesting situation would be with respect to this MMR, maximum marginal rate. Okay. As we all know, MMR is the highest rate of tax applicable for an individual. Now, again, there would be an issue with respect to old tax regime. The highest rate of surcharge is 37%. With respect to new tax regime, the highest rate of surcharge would be 25%. So for all the cases where the MMR is to be applied, not only, see, MMR is applicable not only with respect to individual taxation, but for other cases, number of other cases also, the taxation applies with respect to maximum marginal rate. So for all the cases, what should be treated as MMR? taking surcharge at the rate of 37% or taking surcharge at the rate of 25%. Now again, my personal opinion, not validated as such, needs to be tested by the seniors, by the say some higher persons of higher wisdom. but as per my limited understanding, because now new tax regime is by default applicable, and with respect to this new tax regime, there is no 37% surcharge. The maximum rate of surcharge is 25% only. 37% would come into picture only when somebody specifically opts out from that new tax regime. So by default applicable highest rate of surcharge would be 25%. So in my understanding, wherever the MMR is to be calculated, it has to be calculated by taking the rate of surcharge. It's 25% only, but this is purely my understanding. And one probably very important issue which is arising with respect to this whole new tax regime now, because now 115 BAC subsection 1A, they have made applicable to all the AOPs and BOIs and artificial juridical persons and everybody, and they are saying that section would override all other provisions of the act. It has been given an overriding power. It starts with that non-obstantive clause, notwithstanding anything contained in this act. So what will happen to with respect to taxability of these discretionary trusts, taxability of AOPs with undefined share? Section 164, section 167B, where they talk about taxability at MMR. If there is a discretionary trust, since ages we have learned this thing, we have been taught this thing again and again by all the seniors, that for all the discretionary trust, the rate of tax is MMR. With respect to all the AOPs where share of member is undefined, the rate of tax is MMR. Section 164, 167B, all these sections, they talk about maximum marginal rate. Now 115 BSc is saying, A, it is applicable on AOPs and BOIs and everybody. B, it has been given an overriding power. It overrides all other provisions of the Act except Chapter 12. Section 164, 167B are not part of Chapter 12. So strictly speaking, 115 BSc is overriding these 164, 167B also. So whether all these discretionary trust and everybody, whether the concept of MMR is dead for these discretionary trust, because if 115 BSc is applicable for me, I would definitely like to go for that slab system of taxation up to 3 lakhs and the next 3 lakhs 5%, something like this. So whether this whole concept of MMR is dead for discretionary trust for AOPs with undefined share, going by the basic language of the section, I feel that this interpretation can be drawn, this interpretation can be generated, that for all these discretionary trusts and AOPs, probably MMR concept is no more relevant, but they all would be entitled for this 115 BSc rate of taxation. One is always tempted to ask this question, whether this is something deliberate, this is by design, or this is something which they have defaulted, which in the zeal of marketing this new tax regime, they have overlooked this particular aspect. I'm not very sure. Probably next budget may give us some more clarification, some more idea on this. But in my humble opinion, as the things stand today, even these discretionary trusts, AOPs, etc., which are otherwise taxable at MMR, they are also covered under Section 115 BSc, and accordingly, they are entitled for this lower subsidized tax regime. Okay. So, sir, this is, I think, is all from my side. All these ideas, all these discussion about this Section 115 BSc new tax regime. I conclude my discussion at this point of time. I think Chairman sir can take over from here onwards, and probably if time permits, we can have some question answers. Thank you very much, sir, for giving me this opportunity.
I am very much thankful to you on my behalf and on behalf of all the participants and the members of AIFTP. that you have covered each and everything, each and every aspect of this old and new regime, and all the participants may have benefited by this for their future guidance to all the SSCs of his own or the others. And I would like to say regarding these new topics, which is to be dealt by you, it should be given to all the members, those who remain present, as well as all the members of our AIFTP by way of PPT to be circulated through email ID or the WhatsApp, whatever the facilities available with us. And I am again very much thankful to you for covering each and every aspect and clarifying regarding the old and new regime. Thank you very much, sir.
My pleasure, sir. The biggest beneficiary is always the speaker, sir.
Sir, one question, sir.
Yes, sir, please.
Sir, in case of new regime, whether the SSC who is having the business income can opt for as many times he can opt for a old regime, or only once in his lifetime?
No, sir. It is a once in a lifetime opportunity. You can go out from new regime once, and then if you wish, you can come in once. That's all.
Sir, one time out and one time in.
Yeah, one time out you can take. You can decide to go out in the current year itself.
Sir, please.
Yeah, so you can go out once, and then if you wish, you can come in again. But once you come in, you are always in. Then you cannot go out, except unless you stop carrying on the business.
Okay.
Yeah.
Okay.
Then once you stop carrying on the business, then you will again have that year-to-year kind of facility.
Sir, is there a form to opt for the old regime?
Secondly, just 1 minute, sir.
Is there any old form for opting old regime?
Yes, sir. Yes, sir. The form is same as was there earlier. Okay. For old to new, it is same for new to old.
Right, sir. Thank you so much.
10 IC or something. I'm not very sure.
Yeah, I know what.
Sir, in the meantime, he stopped his business for 1 year. And again, he can come to the new regime or old regime.
And so this is one particular aspect where there is no clarity. But what they are saying, if you stop the business, then you will be having a flexibility. So probably once you close the business and then again start it, you will again start afresh. You can again have that one time out, one time in kind of facility.
Okay, means planning can be done here also.
There should not be any business or professional income in that particular year.
Yes.
Yes. So if you want to again go out, then 1 year you can stop doing the business, and next year you can start. Probably they will allow it. I'm seeing one very interesting question on this chat box also, sir, with respect to salaried assessees, whether the option can be exercised with revised return. So what I understand that in the original return filed, I've continued with this new tax regime. Then after filing the return, I calculated and I feel that no, claiming exemption deduction would be beneficial for me. So now I would like to revise the return, and along with that revised return, I would like to exercise the option for going out. Whether this is permissible, this is what is the question. But the way I see the language, they say for the non-business cases, the option needs to be exercised along with the return of income to be furnished under subsection 1 of section 139. This is what is the message which I can get from the law. Yeah. So since they are using very specifically subsection 1 of section 139, I feel along with revised return, this will not be possible. It has to be 139.1 return and not 139.5.
Yes.
I have one question. मनीष जी, आपने बड़ा सुंदर शब्दों में बड़ी अच्छी हिंदी में और बड़ा अच्छा डेलिब्रेशन दिया है. बहुत बहुत धन्यवाद. मेरा एक क्वेश्चन ये है कि when I am opting for a relief under section 89(1), वो जो एरियर अगर सैलरीज होती है तो I am filing form number 10E for this relevant assessment year 24-25, and I am going to claim a relief of 89(1), and once I am going in for that, it is not allowing to go for the old regime. It is only allowing me to go for new regime only. तो is that so? बस ये मैं एक सिंपल क्वेश्चन है, वो हमको न्यू रिजीम नहीं अलाउ कर रहा है मेरे ख्याल से। वो ऑप्शन अपने को, जैसे आप कह रहे हैं, अपन ऑप्ट आउट करके और ओल्ड में जाना पड़ेगा, तब वो परमिसेबल होगा, वही।
यस यस।
अजय भाई, ओल्ड में आपको अगर जाना है तो ऑप्शन एक्सरसाइज करना ही
पड़ेगा, बस। अब वो समझ में आ गया, ये वेबिनार का ये फायदा है जी।
So far as 89(1) is concerned, उसका ओल्ड और न्यू से कोई लेना देना है। It is available in both the cases.
In both the cases. ठीक है मनीष, thank you.
Along with 89(1) you want old, then that option needs to be exercised.
Yes, thank you so much. Thank you.
एक question है, Mr. X has been filing benefit of tax regime since inception, but before filing return of income for AY 23-24.
जी
Hello.
जी
Form of new regime was withdrawn by mistake, and the return was filed under new regime and tax paid accordingly. But 143(1)(a) received with tax demand payable according to old tax regime. Is there any remedy available for new regime taxation?
I think all these CPC create mistakes. There are hardly any remedies which are available. These all are say.
Sir, in that particular case, you have to contact to the concerned AO of the SSC, and you have to write down one letter under section 154 of the Act to rectify the mistake through CPC. But only the AO can do that practice for rectification of mistake in consultation with the CPC.
Chairman, sir, if you allow me to permit. His question is that he had not went for the new option, but he filed he didn't exercise the option. Just filed the tax as per the old system.
But that is what I want to say. If the order is being received under old regime instead of considering the new regime, that is the question raised by him. Then in particular case, we have to.
Actually, the fact was that when the form was by mistakenly withdrawn, later we tried to file the same form for the same assessment year, but was unable to file the 10 IEC. So instead of filing again same form for same year, we paid tax accordingly. But when 143(1)(a) received, it was with tax demand as per old regime. So is there any remedy available for taking benefit of new tax regime? Actually,
no. So you are talking about AY 23-24,
right?
So you have filed and you exercised an option to go for the new tax regime.
It was already, we were taking benefits since inception 2021-22. But instead of filing, I was in impression that we need to file new tax form. But instead of filing, we withdraw the form. So later on, we tried to file the same form, but we were unable to file the same form because we already withdrawn it.
Sir, first of all, as per law, there is no say option of withdrawal as such.
Yes, that is right.
So how, it's not very clear how you have withdrawn it.
Actually, the office staff was in the impression that he is filing 10 IEC, but instead of filing, he withdrawn. That applicable section was withdrawn by taking an option.
And then CPC has not taken the cognizance of that withdrawal. This is what is the situation, sir?
No, actually, in absence of Form 10 IEC, it is taxation under old regime. So 143(1)(a) tax was calculated as per old regime.
So that means they have taken the cognizance of that withdrawal.
Yes. So is there any remedy of filing 23-24 10 IEC?
No, I don't think, sir. I don't think. See, with all these,
they have already opted out of the scheme, sir. Yes, schemes opt out earlier, and then once you have opted out, the CPC is correctly assessed that the
143 opted out कर लिया बरोबर है, लेकिन उसके बाद जब भरने जाते हैं तो भरने भी नहीं देता था.
एक बार हो गया ना सब opt out.
Once you opted one, There is no facility available.
Thank you, sir. Thank you.
Okay.
Bhaskar, may I say something about the issues which?
Yes, sir. Yes. Why not?
Sir, please, sir.
Yeah. Yes, sir.
You see, Manish, this is very good. You made the presentation very well and all that, and explained the things earlier. Now, as far the issues are concerned, although there can be controversy and all that, but I think subsection 29D, 29BC of subsection 2 that defines the term maximum marginal rate.
Sir,
if we go to that subsection that says maximum marginal rates means the rates as applicable to individuals or association of persons as specified in the Finance Act.
Okay, fine.
So in that light of that, all the issues that what is the maximum limit or the basic exemption limit or MM limit or discretionary. In case of discretionary trust also, because there the 164 is a specific section, 164 or 167B.
Okay.
And this is general section. So if the specific section provides a particular basis of taxation, in my humble opinion, that will prevail.
So, but this section is having a non-obstante clause, sir.
Right,
115 BSE starts with notwithstanding anything contained in this act.
Of course, there can be controversy.
Sir.
Sir, I have a question here. So for assessment year 2023-24, ITR was filed within the due date as per the old scheme. But later on, we realized that we had made a mistake in claiming certain deduction. So we revised the return, but that was done after due date, that is after 31st of July. So in that particular case, we saw that going for new scheme would be beneficial for us. And we filed the form for opting for the new scheme. The form was duly accepted. We filed the return under new scheme. So under new scheme, our deductions under ATC are not allowed. So they were not taken into consideration. But the return was processed as per the old scheme itself. Was it due to we had filed the form for opting for new scheme after the due date? That's why they processed it under the old scheme and did not give us the benefit of the new scheme?
It's a business case or non-business case?
It's a business case.
Yeah, so business case, the option has to be exercised before the due date, sir. Last year also it was the situation. This year also same thing will remain continue.
You have to file your return of income.
In case we had taken the benefit of Chapter 6A, then we might have had some refund. So is there still a possibility that we file a rectification under 154 and claim that it should be processed, giving us the benefit of Chapter 6A as well?
Okay, so you have filed the revised return and in which you have not claimed the deductions.
Yes, sir.
Okay, and they have processed it, treating it as okay. But now the problem is in your revised return, you have not claimed any deduction. That revised return is what is final as of now.
Correct, sir.
You cannot ask them to ignore the revised return and go back to the original one.
So actually, my contention was only this: when I raised the grievance, why should the form for opting of the new scheme should have been accepted when the due date was already over? They still accepted, the acknowledgement was generated, and then they processed it as per the new, did not allow me the benefit of the new scheme.
So, sir, these all are system issues, sir. That the software processing logic is something different. That the form acceptance is happening through a separate mode. The processing is being done by a different software. So the processing software doesn't have that logic that if it has been accepted, I should process it accordingly.
But sir, any chance of rectification under one?
I doubt, sir. In this computerized world, I really doubt, sir. Except say going for the appeal or something.
But that is only the remedy left with us. But how much the amount is involved?
Amount was around 50,000 rupees something. So
then, according to me, you have to forget the 50,000. Otherwise, you will have to proceed till CIT appeal and everything. But it will be a costliest effort for your client.
Okay. Thank you, sir. Thanks a lot for your.
Okay.
Sir, I have a question.
Please.
Hello.
Yeah. Please go ahead.
Sir, last year, in case of individual having business income, ड्यू टू मतलब सर गलत वे से लाइक 10IE फॉर्म हो गया था फाइल, जिसके कारण वो विड्रॉ हो गया था न्यू टैक्स रिजाइन से।
आपने 10IE फाइल कर दिया था,
हाँ।
तो वो तो न्यू टैक्स रेजिम में चला गया था पिछले
नहीं,
साल।
वो पहले से वो न्यू टैक्स रिजाइन में था।
अच्छा, पहले था और आपने फिर वापस फाइल कर दिया विड्रॉ करने के लिए।
हाँ, तो वो विड्रॉ हो गया लास्ट ईयर।
जी जी।
तो सर इस साल से जैसे वो चेंजेस हुआ है, तो क्या अभी हम न्यू टैक्स डिजाइन में वापस जा सकते हैं क्या?
नहीं, इस साल तो बाय डिफॉल्ट सबको भेज दिया ना उनने मैडम। वी ऑल आर इन न्यू टैक्स रेजिम। पिछले साल तक जो हुआ वो तो सब खत्म हो गया है अब।
यस यस यस।
अगर अभी हमको ओल्ड टैक्स डिजाइन में जाना होगा तो फिर
दो
वापस
ऑप्शन एक्सरसाइज करना पड़ेगा।
ओके, गॉट इट, थैंक यू सर।
Sir, I have a question.
Sir, please.
Sir, while return filing under section 148, whether we can opt for a new regime, sir?
I doubt, sir. I doubt 148 would allow.
It is only on
So you are
139.
talking about earlier years. You are talking about
yeah.
Till AY 23-24.
It is not allowed.
It is not allowed, sir. It has to be under 139(1) only.
Yes.
I can always take an argument in appeal, sir. 148 return is also ultimately 139 return kind of thing.
There are many case laws, sir.
So needs to be argued, sir.
The
litigation.
purpose is different.
Yeah.
That's right. Thank you, sir. Your speech is very excellent, sir. We have enjoyed a lot, sir.
My pleasure.
Thank you, sir.
Now, is there any question?
So there are many persons mentioning about this PPT sharing. So I can definitely share it.
Yes.
Probably I'll contact with Rajesh Mehta ji. So how to execute it, sir? I'll do that.
And through HO AFTP,
Yes,
we
Manish
can.
ji, please send me. I will share to all.
Okay.
राजेश जी कर लेंगे सब, वो लेके सर्कुलेट कर देंगे, कॉपी कर देंगे।
मनीष जी ने बहुत शानदार, मनीष जी का उद्बोधन बहुत शानदार। मनीष जी इंडिया लेवल के स्पीकर हैं एंड वी आर
वेरी वेल डन।
स्वीकृति
Manish ji, there is a suggestion.
Sir.
You can kindly contribute your article on this subject, because when this new tax regime was introduced many years ago in 21, that time I had contributed an article on new versus old, and it was carried by AFTP Journal. But this time the ball is in your court, sir, and you kindly write it and we will carry in the journal.
I'll do that, sir. Surely I'll do that.
And Premlata Bansal ji is there. If she is listening to me, if she would like to make some observation, Gupta ji, can you please inquire? Premlata Bansal ji, Premlata Ben?
I don't know, है नहीं है.
या वादवा साहब कुछ बोलेंगे तो.
Thank you so much.
रवि चेक करो, मैडम प्रेमलता जी है, एक मिनट
है अभी तो. She is there.
Yeah, welcome.
वादवा साहब भी हैं.
It is an excellent. My point is, it's an excellent lecture.
Premlata ji now available, please.
Benefited by it.
सर मैं अवेलेबल
हाँ जी.
साथ ऑफिस में काम भी कर रही हूँ सर.
She has not opted out, sir.
Sir, I want to say one thing. In last year, the CPC Bangalore have made the assessment. Even if SSC is opted for the new regime, then also CPC has determined the tax as per old regime. So 154 was to be filed, but so far there is no rectification at their end. Nobody is listening to this aspect. Why SSC should go in appeal for this? Because clear-cut option exercised by the SSC in the return of income, that we are opting under section 115 BAC, but then also. So this has not to be done. It is to be brought to the notice of CPC or the income tax department that what is going on. Even rectification is not being done. And what will happen, that the tax which has been demanded will be adjusted against the assessment of the next year if rectification is not made.
मैडम रेट फाइल कर दो आप इसमें. रेट फाइल कर दो इसमें.
रेट फाइल करे सर, एसएससी का ज्यादा फीस लग जाएगी.
वही बोल रहा हूं ना.
देखो अभी मेरे 2 केसेस में ऐसा हुआ. एक एडजस्टमेंट उन्होंने बहुत गलत किया हुआ था सीपीसी ने. तो डिमांड आउटस्टैंडिंग जो है 2-2 करोड़, दोनों सालों में 7-7 करोड़ की सेम अमाउंट, सेम एडजस्टमेंट करा हुआ था, 7-7 करोड़ की डिमांड दोनों सालों में। तो आई हैड टू गो टू द रेट इन द हाई कोर्ट कि सर डिमांड वो स्टे भी नहीं कर रहे थे, कलेक्शन कर रहे थे।
नहीं, वही इसीलिए मैं ये पॉइंट, इसीलिए मैंने ये पॉइंट रेज किया कि वो डिमांड क्रिएट कर देते हैं, रेक्टिफिकेशन करते नहीं, और नेक्स्ट ईयर की उसमें और 20% कहेंगे आप डिपॉजिट करो, अपील फाइल करेंगे, तो सबसे बड़ी प्रॉब्लम यही है।
तो रिट का फायदा ये हुआ, डिमांड तो वो जो है उन्होंने तो डायरेक्शन दी कि डिमांड स्टे करो, इसको कंसिडर करो एंड ऑल दैट, बट सीपीसी ने, सीबीडीटी ने अपने आप कमिश्नर अपील को इंस्ट्रक्शन दे दी कि अपील डिसाइड करो। उसने अपील भी डिसाइड कर दी, और आज सीपीसी, आज ही नोटिस में आया, सीपीसी ने रेक्टिफिकेशन भी करके अपने आप ठीक कर दिया। तो रिट से ही काबू में आते हैं ये लोग।
सर कुछ केसेस में तो ऐसे भी हुआ है कि असेसिंग ऑफिसर कहता है कि मेरे को 154 की जुरिस्डिक्शन नहीं है, आप सीपीसी में ही जाओ।
नहीं मैडम, ऐसा
हो रहा है।
According to my knowledge and belief, madam, I have applied for 154 to concerned officer at Baroda, and he has requested to CPC to give us the give us him to do needful in this case. Like till today, they have not given the permission to do needful at my case, in my case, and in my case there is a problem of section 214 3AB वाला। तो इसमें मैंने सर्टिफिकेट वगैरह रखा था, इट वाज एक्सेप्टेड बाय द डिपार्टमेंट एंड नो एडिशन वाज मेड, बट ऑन द अदर साइड द डिमांड इज रेज। ऑर्डर इज क्लियरली सेड
सर, कोऑर्डिनेशन नहीं है जुरिस्डिक्शनल असेसिंग ऑफिसर और सीपीसी के बीच में।
तो इट इज स्टिल कंटिन्यू इन माय केस आल्सो। व्हाट यू सेड फॉर 154, they have to ask permission from CPC to do needful in that particular case through him. Till then, they cannot do anything.
सर, मेरे एक चैरिटेबल इंस्टीट्यूशन के केस में असेसमेंट ईयर 16-17 में यही हुआ कि 16-17 में मैंने रेक्टिफिकेशन सीपीसी के पास फाइल कर दी, सीपीसी ने की नहीं, कुछ रिवाइज रिटर्न का प्रॉब्लम था, असेसिंग ऑफिसर जुरिस्डिक्शनल कह रहा है मेरे को भी जुरिस्डिक्शन नहीं है, तो 119 में सीआईटी को एप्लीकेशन डालनी पड़ी। सीआईटी कंसीडर कर रहे थे, उतनी देर में नीचे का एओ बोला कि आप ये फाइल करो, तो कहीं किसी के भी बीच में कोऑर्डिनेशन नहीं है।
राइट।
अब 3 प्रोसीडिंग उसमें चल रही है, असेसिंग ऑफिसर के पास सीआईटी पे 119(2)(b) की और सीपीसी के सामने।
मैडम तभी तो काम चल रहा है हमारा, उससे काम और बढ़िया चल रहा है अपना।
ये बात ठीक है।
अब सबका कोऑर्डिनेशन हो जाएगा तो हम क्या करेंगे?
हाँ बिल्कुल ठीक है। सर आपने बहुत
अच्छा
के लिए किसी नहीं
आएंगे
किया फॉर द बेनिफिट ऑफ ऑल द स्टेक होल्डर्स। इट्स अ वेरी गुड डेलिब्रेशन।
My pleasure, ma'am.
Manish has done very well.
It appears to be a small subject, but it is a vast subject and useful for all the stakeholders and advocates as well.
So these are what I feel. These are actually bread and butter provisions, ma'am.
Yes, very correct. Very correct. Most of the advocates who are doing the assessment work, it is useful to those advocates and beneficial to them very much. Because in day-to-day practical problems, when we files the return, then only it comes to us.
मैडम कितनी रिट्स जा रही हैं इसी तरह के मिसलेनियस मैटर्स में, यू नो वेरी वेल।
बिल्कुल सही कह रहे हैं, बिल्कुल।
और क्या कितनी रिट्स फाइल करनी पड़ती है, कोई ऑप्शन ही नहीं है।
आप ये बताओ कि 10 IA फॉर्म फाइल करा, रिवाइज रिटर्न में करा या 2 दिन बाद में करा, उन सबके लिए रिट फाइल करनी पड़ रही है। असेसिंग ऑफिसर बिल्कुल कंसीडर नहीं कर रहे हैं। तो फिर आप कहेंगे कि काम बढ़ रहा है।
मैम डिपार्टमेंट का कान पकड़ने के लिए रिट ही एक रास्ता है। बिल्कुल सही बताया।
बॉम्बे हाईकोर्ट में जस्टिस श्रीराम ने कितना ज्यादा वो कमेंट्स पास किए हैं कमिश्नर ऑफ इनकम टैक्स पे
151 के लिए।
हाँ जी।
नहीं, अभी मेरे केस में हाईकोर्ट ने ऑर्डर क्वैश कर दिया, उन्होंने डिमांड हटाई नहीं है, रिफंड मेरे एडजस्ट करे जा रहे हैं, अभी मैं दोबारा रेट में जा उसके लिए।
वो यही तो मैं कह रही हूँ कि डिमांड नेक्स्ट ईयर के रिफंड में एडजस्ट करे जा रहे हैं।
मैं बता रहा हूँ ना,
मेरे एक एसएससी के केस में 2009-10 की डिमांड है।
कंक्लूड करें
रेलवे स्टेशन।
It was very interesting session. भास्कर फिर कंक्लूड करें।
Yes, sir.
हाँ सर,
भास्कर भाई
क्लोज कीजिए, ये तो चलता ही
भास्कर
रहेगा।
क्लोज करें भास्कर भाई।
हाँ जी,
कोई वोट ऑफ थैंक्स है तो ठीक है, नहीं तो सब चेयरमैन ही क्लोज कर दीजिए।
सब चेयरमैन क्यों दे रहे हैं ना? माय सिंसियर थैंक्स टू आवर नेशनल प्रेसिडेंट। Yeah, my sincere thanks to our national president and Gupta ji and session chairman Mr. Bhaskar bhai, and today's deliberation is a very practical subject, on very practical subject, and it's very interesting. No doubt the Dafaria ji deals all the nitty-gritty of this old and new regime. And at the outset, I remind regarding old and two idioms remind me: old is gold and old wine is new bottle. We all are going through the election of our country, and whether it is old or whether it is new, forget it. But you must vote. You must vote in this election, and this is the consequential subject and consequential situation we are going through. So many thanks to all the participants also, and chairman and our today's speaker. Thank you.
Thanks a lot to Kakra Saab.
Thank you, sir.
Thank you.
Thank you, Dafaria ji.
Thank you.
Thank you, Manish. Thank